Hey everybody, Tarek Morshed with the Morshed Group at Sotheby's. Thank you for joining us here for our quarterly 2 market update for 2021. I'm here with Teresa Castle, and we're going to dive right in.
So Tarek, tell me what happened in the market in the second quarter. How much appreciation did we see? What were the keynote statistics? And was it really as insanely competitive as everybody was saying?
Yeah, awesome questions. Yes to all of those, and there was a little bit of a shift. So we saw about 6% appreciation in pricing throughout the quarter, which that doesn't sound like a lot, but if you think about it, that would be, if you extrapolated it over the year, that's 24%. We saw 6%. Supply of housing was extremely low still following quarter one. We were at what I would say 0.6 months, which is literally no inventory. At a 6-month supply in kind of high level real estate terms, that's considered a balanced market between buyer and seller demand. It's kind of a measure of how much real estate is there based on the current rate of demand over the last 12 months. So in any market, 6 months is a balanced market. So if you're at 0.6, there's literally nothing. So we were at 0.6 month supply, which obviously is going to drive a lot of appreciation, the law of supply and demand. And at the same time, at the end of the quarter, and by the end of the quarter, we did start seeing a little bit of shift, which we'll talk about here in a little bit probably, to where it bumped up to about 1.48 months, about 5,600 homes by the end of the quarter. Year to date, prices are up 14%, right, between quarter one and quarter two. And yes, I mean, it was still very insanely hot throughout the quarter where in multiple offers you were seeing 15 to 20% over list price. Buyers were having to literally, give the seller their grandson and their son, to win the bid. And so we're starting to see the initial signs of stabilization by the end of the quarter.
What does this all mean for buyers, and how do you try and help them in this super hot market?
Well, that's also a great question. I was saying just a second ago how things had really expanded and where offers were going, right? And then towards the end of the quarter, things were tearing down just a touch. And ultimately what that meant and how it really showed up is, let's say, closer in central or the very high end, we were still seeing multiple offers, 15% over list, even at the end of the quarter, right? And so then if we translate that to what does that really mean for buyers now and looking ahead a little bit, right? For buyers, while it's been really insane for the last year and a half, right, where everyone's having to pay 15 to 20% over list. Challenging and the emotional roller coaster it's been. Exactly. What we've been doing to date, especially in the areas that are still seeing that kind of activity, is it's getting really strategic up front because it is so insane out there that this is a time where a lot of people make mistakes because most people in the business are busy selling. Right, and they're just churning and burning, and just the emotionality of fear of missing out, right? The acronym FOMO that everyone hears about in today's society. A lot of buyers are, oh my God, I can't lose another one because I'm on my 8th offer, right? And they're just going really nuts on the offer. And guys, it's important to be very competitive, but it's also extremely important to make sure that you are working with someone that really understands, hey, in 2 years, where will this value be? Are we going to end up losing a bunch of money when the market's not hot, or are there going to be a bunch of resale issues, right? Because when the market's hot, everything sells, but when the market's normalized, a lot of things don't sell, right? And so it's a time for buyers to be aggressive is what we're coaching, but also to be very strategic, right? That you're not getting way out in front of your skis and making sure that you're not taking risks that really, hurt you in a few years when the market slows down. There is going to be some people that are making mistakes. An example would be, we had met with someone recently. They had bought the house and been represented by someone, and they were told by that agent that, hey, you know what, you're probably not more than $100,000 in these repairs. And at the end of the day, it actually ended up being that was a massive misquote. And once he started working with architects and engineers, it was a $300,000 job, right? So really being strategic and making sure you're doing your research now and working with someone that really can do that well is very important. And that's kind of what we do in really coaching people up as we're working through the process, as well as making sure that we're really doing like a 360 audit on them to understand where are they going to be in 5 years, and does this make sense or not, especially in a crazy market like this.
So what does this all mean for sellers, and how do you try to help sellers in this hot market?
I think it's a really interesting time for sellers, right? So sellers have held all the cards for about a year and a half, and in my 25 years in this market, I've never, as many hot markets as we've seen in the sellers, for sellers here in that time, I've never seen one quite like this at this level, where literally sellers are getting to, hey, I want a free lease back to stay in the house for 3 months after closing. They're getting it.
Right.
I mean, literally everything, right? And I think given where we're at and some of that stabilization that I was talking about, here's the bottom line for sellers, and maybe everybody listening to this, whether you're a seller or not, we're kind of in the last round of the major price resets, in our opinion, and from all the research that we do. And we try to like really look out 3 to 6 months out. And I think it's a distinction that's very hard to do in real estate, but we've kind of got a little formula that we work out and follow some certain metrics. And so what we're seeing is, if you're a seller right now, this is kind of the last hurrah of the massive, not the massive terms, but the terms that you want in every way you want. This is kind of the last round.
Which you really get to dictate.
Yeah, exactly. So it's a time, if you're a seller and you've been thinking about selling and you're thinking about timing, this is it.
Now.
Get it on now, get it on in the next month or so. What I believe is we're going to settle into still good appreciation and demand, but not like it's been. So as a seller, to maximize, now's your time. You're still going to be fine if you sell next year, but to maximize in terms and pricing, this is the time.
So Tart, could you recap for us the points that you made about the appreciation and the inventory numbers?
Absolutely. It's a lot of information
Yes,
I'm throwing out
is,
there, right?
is.
So that's a great idea to maybe just recap some of that. So, so far year to date, we've seen about 14% appreciation in the market. That's ending Q2, right? Within Q2 itself, it was about 6%. Supply of housing is currently at 1.48 months, ending Q2. Beginning of Q2, it was at 0.6, like I was saying, and so it's moving up a touch, right? Still very undersupplied, relevant to 6 months, but starting to move up and stabilize, right? One keynote I forgot to mention. Actives year over year are down 71%. So there's, again, really speaks to how little inventory there still is, even in the market stabilization. And then in multiple offers, in Q2, we saw still about 15 to 20% over list price. But by the end of Q2, it was starting to band down a little bit to about 15%. So those would be some keynote stats.
And so what about homeowners who are neither buyers or sellers? What does this all mean for them?
It's the best of both worlds for homeowners. Homeowners have experienced unprecedented appreciation, right? Between last year or 2020, they saw 15%, right? This year, they're seeing about 15 to 20%, right? And as we transition and looking ahead and as we stabilize, it's not like you're going to lose a ton of value. The market's not going to crater on you or anything like that. But you're going to see about another 5% in appreciation between now and the end of the year. And then next year, you're probably going to get into just your normalized, but still way above average appreciation compared to most markets of about 7% to 9% depending on area. So, if you're not thinking about buying or selling, but hey, you're just wondering where the market's going, that's kind of where we're at. And if you are thinking about, well, maybe in 2 years or so that we might be thinking about selling, I would definitely say really consider timing, even though it's a little bit ahead, because I do expect some market flattening around 2023 using kind of our predictive models. Feel free to reach out to us as a homeowner, no pressure. Just we can kind of lay out some things for you guys to be thinking ahead and still getting some great upside looking ahead.
I think what's important to know is what are some of the important factors creating the current market environment, and what are the drivers or impactors that are really feeding that?
Yes. So for all my talk about where everything's at, right? What's the foundational driver, right? Yeah, exactly. I think currently we have 3 or 4 main things. Okay. Number one are in-migration numbers. So in our last market update, we talked about how we are still seeing a big number there. So here's the reality, guys. It's, for 8 years running, Austin has led the U.S. in population growth. That speaks in the in-migration, obviously, right? Last year, that went even higher. So we went from 55,000 people a year to 70,000 people last year, which was a massive part of the driver. And then this year, we're still on pace to do 65,000, which is a little bit lower, maybe 60 to 65. It's a little bit lower, but it's still higher than the highest running numbers in the country for 8 years already. Q2, we've had also 60 relocations or expansions. That's 5,500 or so jobs just in one quarter that are coming to Austin. The interesting anecdote about that is that the majority of those aren't even the big boys, the Amazons and the Googles and the Samsungs. A lot of those, which really speaks to our entrepreneurial and tech kind of startup environment, right? A lot of those are your, mid-sized companies and your startups. But that just tells you what's coming here, and that's a major driver in our real estate market is job growth. One key note also, Bloomberg recently ranked us as the city for tech and tech startups, where we ended up having the highest attraction index for cities for people to move to for that particular space. Supply chain issues, meaning all the issues that builders and contractors are having. That was an issue last year, still continues to be an issue. It's less this year, but it's still a pretty big bottleneck where build times are what used to be on a normal, $500,000-$700,000 home might have been 8 months. Now it's still about a year, maybe 14 months. Better than 18 months that it was, but it's still pretty out there. That creates a lot of bottleneck and impacts the demand on the resale market. At the same time, April and June, we actually saw the lowest bumps in pricing that we have all year. And that kind of speaks to also that the fact that while these factors are really driving the market, what I was saying earlier, where we're also seeing some stabilization, you're also starting to see some of the frothiness finally coming to an end. Instead of 5 to 10% jumps in prices every month, it's 2 to 3%. So we are starting to kind of relax in. So those would be all our factors.
So Tard, looking ahead, where do you see the market going the rest of this year, and where do we really end up? I mean, where are we in terms of price appreciation?
So, as I've been saying, we're in an interesting inflection point of the market where we're starting to see some stabilization, right? And what I see looking ahead is, instead of the 14% or so we've had year to date, the rest of the year, quarter 3 and quarter 4, we're probably going to end up seeing close to 5 to 7%, which in any given market in any year, most people would be thrilled with, right? But I think that we're going to see about 5 to 7%, and supply numbers that are at about 1.48 months, and about 5,400 homes on the market. That's probably going to move up as a overall average. I'm thinking to maybe 3.5 months, and maybe more like 7,000 homes on the market, which is still very undersupplied compared to 6 month supply of 18,000. So we're still going to be in good shape, and that's why we're still going to get some appreciation, but we're going to see some stabilization happening finally, which I think actually is very welcome for a lot of people. And we're still going to see multiple offers, but they won't be at the level that they've been.
Thank you so much for taking the time to answer a lot of these questions and address these concerns and challenges during this market that so many people have had. Really appreciate you taking the time to sit down and lend your expertise.